What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go and join the newsletter. Go to coinmastery.com/invest. Put in your first name and your email address and join us on this unbelievable journey that we are on. Man, look at that. Look at that chart. Look at that thing just moving up, moving up. Some incredible news today as things blast through the big psychological barrier of 5,000, or I should say 4980, but 5,000 was really the big barrier that we needed to break through. And not only did we do it, but we did it with authority. It wasn't even a hesitation. It was just a straight domination immediately through. A little bit of a hesitation right here around 51.75, but continuing up. This is very, very interesting. Very good news for now. And there's a few reasons why. And this comes from talking to some traders, from watching some traders on Twitter, from also just from reading fundamentals about technical trading. But the reason why this matters is because I'm scrolling out here. Let me get back to the 1 day chart. Is that TradingView doesn't really go back far enough to see this, but at some point, curves need to go, or do go, what's called parabolic. That means in an exponential curve, it gets so steep that it goes up way more than it goes to the side, right? So you don't get that linear curve. It's kind of slow, and then fast. And I do not know enough about exactly how to measure that. I could ballpark it for you, but it really just has to do with the slope of the trend lines. So when you're drawing trend lines, which would be hard to do without more history, when you draw, let's say, this trend line from this bottom to this bottom, and then this trend line here, as it hits certain slopes, or as it maintains certain structure, like structural integrity, that means it starts to pop. And the reason why that's interesting is because that's when this is going to go bananas. Now, I'm not saying we're there yet. I think this is starting to look pretty good. I think that it didn't quite go over far enough for me to really see the parabolic, but who knows? This is an insane market. But what this means for you is the following. At least in my opinion, this is what my takeaway is. This thing just popped big time because of the $5,000 psychological barrier. There's other factors, but that's the big one. We'll talk about those other factors in a little bit. That doesn't change the fact that there's still a little bit of potential room within this run. When I'm talking, for anybody listening on the podcast, I'm talking about the run from let's say 3,500. So from like end of September, 24th, 25th, that run up to now, this happened. This happened. There was way more growth than there was retracement, which is totally fine. But when you zoom out, typically, when you see this kind of growth, it's not necessarily even. You tend to have some sort of retracement at some point, right? I mean, if you go and look at any of these growth runs, like this one happened really, really fast, and then you had a big retracement to fill in all these big jump areas. We have that a little bit over here, as you can see, meaning this could still go way up, but at some point it has to retrace. And the question is it going to go straight up? Is it going to be parabolic and have a little bit of a break in the interim and then come back down hard, which is what like a bubble would be? Or is it going to retrace in the interim and then go through the moon, just go but completely crazy? And that's typically what you're going to see. And if you don't see it happen now, it will happen at some point. That's just the nature of how these markets work. Now, I'm looking at the 1 day chart. So, right, you may be looking at this and thinking, I'm looking at, was this April? And you may be thinking, well, that didn't have it. But if you zoom in to, let's say, the 1 hour, which I don't know if this is going to be able to go all the way back, and you go back and look at that, it happened a lot more slowly, right? It wasn't so fast. And that's the key, is that when you look at the overall like mean growth line, that's really what matters. And when you see these kind of runs where there's no what's called trade outs, like there's no up, down, up, down, up, down. Like if you don't see that, at some point it's going to happen. I don't think there's a chart in the world where that doesn't happen at some point, whether it's short term or long term. It will happen. That's exactly why this went down to 3,000. Same reason why this is going to get probably filled in at some point. So first thing you got to do, enjoy this run. Enjoy some money if you have it. If you have this in your game plan to scalp your profits, do it and enjoy it, and go grab a couple of beers and high five your friends and enjoy this amazing market. If you want to hold it, hold it. This could easily go up to 54, 5,500. My plan is I'm just going to sit back and let this thing ride. Watch the altcoins, which we'll talk about in a second. And then I personally think that this is going to come back down. I don't know what the levels are now that we have this new all-time high. I'm going to double check what the levels are going to be. I'm going to wait for this to come back down for a dip to fill in everything, to give us, let me zoom out a little bit. It's going to give us a little bit more room sideways so that parabolic, whatever you call it, the skyrocket happens. And if you remember, over the last few months, or I should say last month, let me go to one day, when we were looking at, I guess July, we weren't really talking about it, but over here, middle of September, when it dropped a lot, we were talking about how there's a consolidation happening, but it needed sideways action. I still stand by that. I still think that I love the growth. I'm happy to have the growth, but I want this, and I think you would want this. I want Bitcoin to go big. I want it to go like 20, 30, 40,000. And the only way that's going to happen is if it fills in, if it buys itself some time horizontally. Now, sometimes in markets you don't get that because the demand is too big for the chart, and you just go straight up and it comes back down in a big way, but then it eventually goes way back up. I mean, look at Amazon.com, good example. But selfishly, I want this to retrace a little bit. I want it to go a little sideways for like a couple of weeks, maybe the 2x fork, and then I want to go big. So I'm going to wait to buy anything until I see a big dip, even if it goes up to like 6,000 or whatever. I'm waiting for a dip. There's going to be one, whether or not that happens later on or now, but that's just what I'm going to do. But this comes down to your own strategy. We've all got different goals here. My goal is to buy big, buy long, trade less. That's what I'm here to do. But overall, it's good news. This is positive progress. Now let's take a look at the altcoins. Look at this, Monacoin and Parkbyte. Monacoin, I believe, I could be completely wrong on this. I believe this is big in Japan, and I think that they've used this in Japan. So there may be some news about these two that I do not know about. Truth be told, I have not looked at why these things are up the way they are. I couldn't really care less because I'm not watching them. But if you own them, terrific. I think the takeaway for you guys is, hopefully by now, if you've been watching this for a while, you start to see these big pumps, and you realize, one, it's a really good distraction. I mean, it's easy to go look at this and go on CoinMarketCap and try to figure out what's driving this. Is it legit? Is this something new? You got to realize this is not going to change. You're always going to see these pumps, and if you chase them, you're just going to get completely hosed, right? Because you don't know something that somebody else does, and that's really the name of the game in any sort of market situation. So I think that's the first thing. Is it's psychologically, it's good to just get used to these kind of distractions. And secondly, realize that this is not real growth. I mean, this is a fluke that it goes up 100%. I don't care what it is. If it goes up this much in one day, it's not going to sustain that, short of some, like they get, Jeff Bezos puts it on the front homepage of Amazon. It's the only thing they're accepting. That's probably a sustainable growth jump. But I think that this is just always good to test yourself to make sure that, okay, I see something else blowing up. I'm sticking to my plan. I'm sticking to the 5-7 coins that I'm really focused on. And I'm watching those for the big swings. Okay, and remember, guys, these are not hard and fast rules. These are just this is what I do. This is what I found works, and seems to be what most of the top guys that I meet or see or talk to. This is how they do it. So what you should be looking for is really good deals. Now, a lot of this is going to depend on what happens over the next, I'm going to say, week or so, but realistically from a pricing standpoint, really over the next 24 hours in terms of where these altcoin prices are. But if you are looking at a coin, let's say you're looking at, I don't know, I like picking coins that I don't own so that you guys, so I'm not talking about the same stuff. Let's say you're looking at Ethereum Classic. I don't think I own any. I used to have some from a scalp trade, but I don't think I do. Right? We had this dip the other day on the 9th and came back up. And this was true on all altcoins. And there were some people who were like, oh man, this is really exciting. I'm going to go buy this and whatever else it may be. Now it dipped down and this is even lower than it was before. So I guess the question is Bittrex responsible for this one again? Give me a break. And so these dips tend to not be one-time events whenever you're seeing this sort of behavior in the main trading coin. Do you see what I'm saying? So if you're seeing these kind of surges, the surges don't necessarily happen in one at a time. It happens in 2, sometimes 3. And so when you see these huge drops in altcoins, when they're based on uncertainty, when people don't know why this happened or it's not really severe, it's typically not the end. There's going to be a second bleed out, no pun intended here, but that's why you can wait until the second dip. Is this the lowest it's going to go? I have no idea. But it's the chances of it going up after this dip are a lot higher than it going off of this dip. And if we wait again for it to come back up and then Bitcoin goes up to 6,500 or whatever it may be, there's going to be a third dip that's even lower. And so your decision process excuse me, should be as follows. You see it coming down, it goes into its first big dip. Maybe you buy some. Right? It doesn't matter any of these coins. It doesn't matter what the news is, doesn't matter what the headlines are, doesn't matter the reasoning. If it's the first big dip, maybe you buy a little bit, especially when the volume spikes like it did across all the coins. And then it comes back, but it's not a very severe correction. It kind of comes back a little bit, and there's still a lot of uncertainty in the major markets, like the trading pair market, i.e. Bitcoin. You wait until the next dip because there's going to be another dip. It always happens. And the question is, when this goes down, it's a lower risk, higher reward typically because it dipped once, now it dipped again. Okay, that's really getting all the weak hands out of here for the sellers. Now your decision is, well, is it going to dip again? And nobody knows if it's going to dip again. But every time it does dip, the chances of it continuing to dip go lower and lower before it goes up and you can make your 20% on your scalp or whatever it may be. So I think 2 dips in a row is good. It's usually a good time to buy in, pending Bitcoin not going through the roof. I think if it goes to the third dip, we're in business. I mean, that's when you can really start to buy up a lot, especially when it's not driven by some sort of direct, immediate problem with the coin, right? If Ethereum Classic got hacked or something and it dropped like that, that's a different story. But we're talking about just market behaviors when it's trading against the main pair. So if you're thinking about buying a dip, Great. That's step one, complete, done, achievement unlocked. Realize that there's always going to be another dip. And the question you're asking yourself is the next dip going to be as good of a risk reward as this? So anytime you see a dip, what you really are looking for is how does it come out of the dip? And this did not come out of the dip very strong, but people were getting impatient. They're like, oh, maybe I should buy in. Now there's another dip because Bitcoin had all the momentum. The question is the momentum going to stay in Bitcoin and keep skyrocketing, or is it going to shift back over to altcoins? I don't have the answer. Some people will tell you they have the answer. They don't, but you got to make up your own mind on that. I personally will probably buy a little bit more in this dip. Got to look at my go-tos here, but still have some, not go all in on anything. I don't think that you ever want to do that unless you have info or you have an advantage that nobody else has. I've talked about this before, the idea of diversification. Diversification will make you more money than anything else over the long term, 90% of the time. But the 10% of the time is when you have something that gives you an unfair advantage. Famous examples, Warren Buffett, everyone thinks that he made all this money by buying up companies. But what he really did is he built his first company. I think he made $25 million on the first company. And then he used that to buy Geico. And so the stock market was getting, let's say, 15% returns off of his diversified portfolio. But then he put in his own money into an unfair advantage of getting 15% residual returns from the insurance premiums on top of the stock market growth. So he was getting like 35% on his holdings, which then compounded into the hundreds and hundreds of millions that turned into hundreds of however many billions of dollars, like $300 billion market cap now. Meaning, you want to diversify until you have info that you know is good, or you have something, right? If you went out to beer and got beers with Charlie Lee, and he told you, hey, listen, man, nobody really knows this, but Litecoin is going to be featured in Google, in Android. We're going to integrate with Android, and it's going to be on 400 million devices, blah, blah, blah. But nobody knows that. That would be a good reason not to diversify. That would be a good reason to put a lot of money into Litecoin, because assuming the info is good, that it's going to go big. So unless you have really good, better information, technical analysis, fundamental, unless you have something that puts you ahead, never go all in. Never go all in on a trade, never go all in on a coin, just never go all in on an asset class. Once you do have an advantage that you have, that's when you do go all in. And that's when you make the big Lambo, Ibiza, crushing it money. Just kidding. Let's do a couple other things that I thought were interesting. And I gotta piece out of here. I'm heading up to Lake Tahoe. So JP Morgan, I'm not gonna really harp on this. I'm not big on the I told you so stuff, but it is interesting that he said he's going to stop talking about Bitcoin. I think that the immediate reaction is like, hey, you're an idiot, blah, blah, blah. But I think it's just bad publicity for his company. This didn't get the reaction that I don't even know if he really was strategic about this. I think that he just kind of said it in passing, and it became a bigger problem than it was. I don't think that he's realizing, oh, this might end up dismantling my entire company, which very well could happen. I think that he was just like, I gotta put this to rest now before this gets really crazy, because he's really become a scapegoat for the entire industry and for the media in that sense. Like, he's the guy who famously said Bitcoin's gonna the worst thing ever. And so I think that that's really interesting. And what that means for you guys is, I think that not necessarily that these banks are going to immediately start putting money in. I do think that we've known that for the whole time. What I think this means is more about the overall market sentiment. So when you think about what's actually going to make you guys money, make us money, me and you a lot of money, is big money coming in, but also a lot of our friends and family, like our networks. How can we get them to, first you got to convince them, then you got to actually get them to buy it on Coinbase or something. This is a really good way to, you never want to gloat. You never want to walk up to someone and be like, hey, I told you so. We're going to crush it. Get on the train here. That's not, don't do that. What you want to do is say, listen, a tide is shifting. A lot of smart people are starting to at least entertain the idea that there's something to this. It's not going away. You should check this out. I'm happy to send you more information. Send them to Coin Mastery. Shameless plug there. But you see what I'm saying? This is a good way, not for you to say this is, look how smart I am. This is a good way for you to help your friends get on board, or get the people that are skeptics to, it's a little bit of ammo to help to get them on. So that's how you should be thinking about this kind of stuff, because that's how it's going to benefit you. That's how it's really going to get you guys, get all of us, the early adopters, to get in. Telling people you're right is just a stupid thing. Don't do that. That's, Anyway, interesting to say the least. The SEC is doing a live stream. I'll post this. I'm sure they'll have a recording. Painful to listen to this, but important to listen to this. And I'm sure there'll be some Cliff's Notes version of this on Cointelegraph, so you can go check that out. But these guys, and men and women, I shouldn't say, not just guys, I don't think that they're necessarily dumb. I don't think I would ever say that, because I don't know these people. Like, who knows? But I think what it is they're just not, they don't understand the full picture. They don't understand the tech. They don't understand what's potentially going on right now. And they're making a lot of decisions with entrenched beliefs in a current system. And that could be anything from what is blockchain to what are the threats of blockchain to what are the scams, what is an ICO. And I think a big thing about this is it opens your eyes to how much an education still needs to happen. And I think that this is a good indicator, not only of the SEC in the United States, but just of people in general. This may be a very good insight into what people are thinking about. From a regulatory standpoint, I don't know how this will play out. But what I do know is that the more people this is a good indicator that most people are thinking this way. And we as a community can listen to people like this, and instead of judging them, which you do. I mean, I tweeted, I was like, come on, man, like, give me a break, just because that's your first reaction. You take that and then you realize, okay, there's a huge learning curve that needs to happen. How can we help other people understand what's really going on here? How can we get educated? And then how can we spread that message in a great way? It can be, you can tweet about it. You can put it on Facebook more. You can tell your friends and family. You can send emails to people you know. And you don't have to sell them anything. Just explain to them, hey, this is what the SEC is looking at. Here's what they didn't really get right. And here's some information on what's really going on. That's a really, really powerful message you can send. And that ripple effect is huge. So there's always a way to leverage this, right? The thing to think about, to remember, is that we are in a very critical moment where it may go parabolic. It may become just, straight up and then a big correction and then really big after that. Or it may do its own thing. But the media is starting to shift. The message is starting to shift. People are starting to say, well, who cares if it's a bubble? I need to get in on this. This is a really important point for all of us to not be, I got in early, you're an idiot for not listening to me before. Don't do that. What you want to do is say, listen, there's still a lot of opportunity and there's still a lot of mixed messages. Here is a way that you can be smart about it. Let me help you join in. That's going to get way more people into this party than anything else. So I think that's really important. Remember, guys, make money, help other people in the process. Like there's a very clear correlation between how much you help people and how much money you will make in life. 100% true. And the more you guys help people, the more money you will make. Even if other people make money in the process, that's just how it works. The more we all do it with a positive spin and not a, 7 deadly sins type of spin. Real interesting. One thing to keep in mind, I'm not going to harp on this because I personally don't have all the information on this. This is an article from a few days ago, but it's relevant. On Bitfinex, which is a big exchange, they allowed people to redeem their SegWit 2x coins and then also trade them on a futures market, meaning that they would essentially loan you your 2x tokens based on how many Bitcoin you have on their exchange, and then you could trade those tokens and then as if it's a liquid asset. I do not know the entire mechanics of this. I may be getting something a little wrong, but from what it seems like, that's it. I don't use Bitfinex, so I can't speak to this personally. But the reason why that matters is that could be affecting the price, right? That could be fueling part of this. Jesus, look at this Bitcoin run. That could be fueling part of this. This is crazy. And it can also give you insights into what the 2x fork is going to look like. Right? Imagine if you could trade Bitcoin Cash beforehand. I don't think anyone knows quite yet how because futures markets are massively speculative when it's not a completely liquid market. Meaning, if everybody if this was on Coinbase, then we would have a very good idea of what this is going to mean. But there's a lot of people that control a lot of Bitcoin. A few people control a lot of Bitcoin on Bitfinex. But it is interesting. If you are thinking about, hey, does this mean free money for me? I don't know. Personally, I'm not going to chase this because, one, I'm a little sketched out by Bitfinex, to be perfectly honest. And two, it seems a little too good to be true. And I tend to try to stay away from stuff like that. But I'll put this link up. You can go investigate this for all I know. We'll see. Second to last thing, factors that influence buying behavior. We're always, every time you see something like this happen, and this is going to happen so many more times over the next year, 2 years, 5 years, whatever, where you get these runs, you are going to see so many people trying to determine what they should be buying, right? It fuels a lot of buying behavior. Now, luckily, in this case, there's a lot of really good dips that you could potentially buy. If it's a coin you've been watching, maybe a big opportunity to buy some dips. But often, it's just that it's actually this FOMO that's driving it, that people don't want to miss it. And so you're going to go on all your networks today, and you're going to see all these questions about what should I buy? Should I get into Bitcoin? How should I allocate my money? And I mean, how many times have we gone through this where if you don't have a plan for what's going to happen, you're going to make a bad decision because you're making it right now while you're literally going to be watching this ticker, thinking to yourself, oh my God, should I buy now? Oh my God, it's going up. What should I do? And that's not a good position to be in. And if you're watching a dip, same sort of thing. And so it's good to be conscious of this, because you guys all know you've signed up for the newsletter. You got the whole email series. Hopefully, if you haven't, go sign up for the newsletter. And that's what we talk about. The fundamentals of making money is buy low, sell high. And yet most people buy high and then they sell low. I mean, a vast majority of people, even if they don't talk about it, who's going to admit that they did that? But something like 75% of people do that. So yes, if you are buying a dip, terrific. And if you have a plan for when you're going to sell it, even better. But this is just it. The more you notice this in other people's behaviors, the more you will be conscious of it when you are tempted to do this. And I always want to keep bringing this up because this is the number one reason why people lose money in volatile markets like this. It's because they make decisions while everything's happening instead of making the decisions early and then have a plan, having a system while everything happens. That's the difference. So always want to keep coming back to this. Last thing is, this is probably, so yesterday I tweeted about a bunch of stuff, which got a lot of engagement. You guys should go check out twitter.com/Carter Thomas. This was a tweet that I think, looking back, I didn't really crystallize this well, but I think that this is interesting. When I read a lot about history, about markets and historical cycles, trying to understand what led to different events, specifically the market sentiments, the psychology, things like that. And one thing that was so different in the 90s and 2000 is the technology that was available, specifically in things like news and social networks. The ability for news to permeate or to be manipulated or anything was possible back then, but it was centralized. I mean, there was news networks. They had newspapers, magazines, TV, radio. And there wasn't a whole lot of other things. And so there was only a handful of people that were actually driving the IPO internet bubble, meaning there was a handful of banks that were actually doing the IPO process, and they were listing it on a handful of exchanges. And then everybody was given information through a series of news outlets, or a handful of news outlets, and making their buying decisions based on that. They couldn't go and do their own research. I mean, most people, like, they couldn't go to a coin market cap. They couldn't check this out. They couldn't go on Twitter and ask other people. They couldn't watch YouTube videos. Not that this is better. It's just that there's more data points. The other side of this is the tech, right? The ability for all of us to go out onto an exchange and buy our own stuff is a big deal. And E-Trade and all that was kind of like, it was, people were talking about it, but it wasn't a thing. I mean, you still had to use a broker and go through it all. And you couldn't touch it until it was actually on the IPO market. So you think about how much money went into that before it even got to the liquid. The reason why I bring this up is because I'm starting to wonder if this is as much of a bubble as people think. Because when if you look at the market, if you scroll back to like 2011 and you look at all the cycles we've been through and all the big retracements, I mean, we're going through, we just went through a 40+% correction. That's equivalent to the 2008 recession. And people, I don't think, understand that the deltas that we're used to are, depression level bubble crashes in big capital markets. And so what I'm wondering is, because of this new tech, because of this new proliferation of data, are all of these prices happening way faster and is already baked into the price? Meaning, if it does go way up and it drops, why wouldn't it just come back just as fast as every other of these? Even with things like regulation, even if something gets hacked, even like every single doomsday scenario that we all talked about on Twitter last week, if every single one of those things happen, why wouldn't it come back just as fast as everything else came back? Why do we immediately assume that this is going to operate like an archaic system that is inherently slow because of the way that the markets are built? They're built on old tech, they're built on old systems, they're built on different processes. We are just so close to the price. And so I'm looking at this and starting to wonder, people compare crypto to the internet bubble, and I'm starting to wonder, well, maybe it's actually more like, what do you call it? Like Facebook at $10, right? That, like, if Facebook went to $100, you might be like, oh my God, this is insane. No one's ever done this before. But then it keeps going up to 300, and you start to realize, oh, there's just a whole new class of companies that can actually hit $3 trillion. There's a new Amazon, right? And we're just being able to do that a lot faster. In other words, I don't know if crypto is just one asset class, and stocks are an asset class, and bonds are an asset class, and they all have their own profile that people, a label that people put on them. I'm starting to wonder if crypto is just the new, it's like the new economy, right? Instead of being like, oh, well, I'm going to sell my Bitcoin for fiat, you start to say, well, I'm going to sell my Bitcoin for another altcoin, right? There's a stock market inside crypto. And I know this is getting meta. I know this is like a next level thing. I don't think that there's anything you can do about this. Like there's no actionable, you can go make money on this information. But this idea, I think I wouldn't be surprised if this really takes off once some of these altcoins start making money, where crypto becomes its own world of, and within crypto, there's asset classes. Within crypto, there's all the things. There's index funds and bonds and everything in between. And then all the other capital markets don't even compare, because not because the companies are better or worse, but because they are on slower, archaic systems that don't allow people to have access to them more quickly, right? Something to think about. I'm going to keep thinking about this. I'll obviously keep you guys updated, but I think that may be 3-5 years out, but always good to keep that in mind. And as we do this, Bitcoin just will not stop. Wow. All right, guys, I'll see you tomorrow. I'll probably be in a hotel tomorrow morning, but I will be here bright and early. Hope all is well, and I will talk to you soon. Peace out.